Hey everyone, this is Steve Good, and welcome to our next episode of the Coin Chat. Today, our episode is going to be called "What the Fork is Happening in 2018?"
That's so appropriate. I love it.
Yuri, how are you, my friend?
I'm doing well. Things are going well, but yeah, I have that exact same question.
A lot of things are forking up. I mean, the coins have been down, they've been up, they've been down. There's been global sell-offs in the stock market, up and down 1,000 points in a day. It has been just complete and utter chaos.
It is. It's a fun start to 2018 on top of this cold and flu season that is just tearing people apart.
Yeah, absolutely. Hit me as well, I know.
Yeah. Excellent. Awesome. So let's let's jump in on really what the fork is going on. But before that, I want to know if you have tried to purchase more things with Bitcoin.
Oh, yes, I did. I was at a shop with my wife, and actually we were walking by. I mean, I know it's a little bit posh, but just for the fun of it, we went into a Rolex shop because I thought, it's a luxury item, gotta be more switched on. I mean, if Lamborghini can sell cars with Bitcoin, surely Rolex can do the same. And we happened to be walking along, and we passed the Rolex shop, and I grabbed her and said, let's just pop in and try this. So I wish I had a recording of this one because it was really funny. So my wife went through and she looked at a couple of different watches, and I mean, they're $10,000. And I said, well, okay, that's a Bitcoin or so. And I said to the lady, so, can I pay with Bitcoin? And she just had this absolutely blank look on her face. And she said, sorry, sir, I'm not familiar. What was the word you used? I said, Bitcoin, the digital currency.
Yeah.
And she says, and her response was so bizarre. She says to me something like, yeah, well, the 5-year warranty doesn't cover that. And I just looked at my wife and I said, I'm sorry, I'm not sure I understood what you meant. And she said, well, and she just was fumbling. And I said, let me just help you out. I said, you take credit cards, you take cash, but do you know what Bitcoin is? And she said, no. I said, okay. Well, and then I just kind of proceeded to explain to her a little bit about Bitcoin. And she said, sorry, sir. She said, I really know nothing about what you're talking about. And I don't know what Rolex's policy is on Bitcoin. So if anybody from Rolex is listening, I highly recommend you at least educate your staff about what's happening in the world, because it is in the luxury goods items. At least you guys should be aware. But oh my God, it was very, very amusing. I mean, trying to tell me about 5-year warranties related to Bitcoin, but having no idea what she was talking about. It was really weird.
You got to admire her ability to just... She's like, yep, don't understand that, but I'm going to interpret what I think you're saying.
Yeah, but we can give you 5-year warranty on the Rolex if you buy it.
Exactly.
Don't know how you're paying for it, but at least you get 5-year warranty on it regardless of wherever in the world you go, and you get cleaning as well. It's like, okay, great, so I get my watch cleaned. Oh, but you have to pay for the cleaning. Right, okay, so it's like, interesting.
Oh, man.
So... Anyway, so it was an entertaining a trial. I mean, it certainly beats some of the other things I've tried. I mean, it doesn't beat the one where the guy asked me if he could see a coin when I asked to buy a coffee with it. But
right.
at least to all of our listeners out there, what this tells you is an interesting factor, which is that many people still have no idea what Bitcoin and cryptocurrency are. So we're still leagues ahead in terms of the general population understanding and being aware of it. Mm-hmm. So whilst there might be some elements of bubble in the nature of, this stuff running up too fast, this past week or two and then falling right back down, it doesn't mean that the general population is even remotely aware of any of this stuff.
Yeah. All right. Well, actually, that does lead us to my first topic in question, and that is about what's happening with credit cards. So we've had Bank of America, JP Morgan Chase, Citigroup, UK, Lloyds, even Virgin Money have all come out and said they will not allow purchases with crypto on credit cards.
Well, I gotta tell you,
things change.
Yeah, I gotta tell you, Yuri. First of all, I mean, in the U.S., they have all the cash back for buying things. Yeah. Clearly, they don't want you getting your 1% cash back for buying crypto.
I know. That's what I was using on mine originally, and especially when everything was running up in November, it was awesome because it more than paid for the few fees I was running on the credit cards to get the 1% cash back and to have everything else run up. So that was awesome.
I just wish the UK would wake up and give us the same services, because, it drives me crazy that they don't have cashback programs. And, they used to have like all the airline mile credit cards, and they've fallen so far behind. But clearly that's not the main reason if both the US and UK have done it. So maybe it's because they just don't want all sorts of idiots going and running around and spending and maxing up their cards all at once and breaking the banking system.
I mean, that could be a major reason. You hear, I've been reading stories about a lot of people who, oh my gosh, or even like to protect from themselves, like jumped in and maxed out their credit cards.
Exactly.
When Bitcoin was at like 19,000 and now are crying foul because it's nowhere near that.
Of course, the other theory would be, God forbid we should allow people to average down their prices when you bought Bitcoin at 12,000 and you can buy it now at 6. So let's make sure they can't actually average down and make a better return on their investment by stopping them now at the worst possible time. Or the best possible buying time, actually.
Mm-hmm.
So I think there's actually there's a realism in all this, which is probably more related to the fact that, you can't buy stocks, bonds, with credit cards. So if they're treating crypto as another form of a commodity or an equity of some sort, then that would be a logical reason not to allow usage of credit cards, simply because they're following the same rules as they do with buying stocks. I mean, you don't buy Microsoft shares with your credit card. You have to have cash. You have to have, whatever it is in cash to buy 100 shares.
Yeah.
So there's some logic that says that's probably what it actually is, but it would have been nice if they had, not done it as a consortium and announced it all within 2 days of each other. Clearly they'd all been communicating and working together and did it as a single group, which I do find a little bit questionable that they all do it at once.
Yeah, that is quite questionable. So long term, do you think this helps or hurts the market in general?
I don't think it really hurts the market. I mean, my feeling is that there's something to be said that if you want to buy crypto, if you don't have cash, then maybe you shouldn't be doing it. And we don't want people over leveraging themselves. I mean, the whole point of investing has always been about you invest with what you have to make more. And if you don't have a lot, you start with a little bit and you build on it. So, I mean, it kind of reminds me of like, the old grandmas coming out of retirement homes that start using their cards to buy some crazy wacky scheme, and they wipe out their retirement funds. And that's certainly not what I would want to advocate by people maxing out their credit cards to try to buy crypto. Now, I'm not saying that that's necessarily what everyone would do, but I kind of feel like there's some logic in it from that standpoint, although it does seem rather restrictive. But on the other hand, if you want to buy crypto, then buying it the same as shares and using cash does kind of resonate as something logical. Because, why do you want to spend a bunch of money and have to be paying interest on it for the next 5 years to pay it off? And if the coin does go down as they do, then you're stuck with a loss and also interest, so you have to pay. And that's not a very good situation to put yourself in. So I'm trying to be balanced and sort of, trying to reflect on the whole thing. But I don't know. I kind of feel like there's some logic in it. Not just to stop us from the idiots buying, but just to protect the consumers generally.
Yeah, that's true. I mean, and at least you can still use your debit card if you want to, because it is
that's
connected
cash
to your bank. Yes,
and that's the whole point: is you can still use cash to buy stocks, bonds, to trade FX, to buy commodities like diamonds and oranges if you want to get really exotic, or if you want to buy crypto and get really exotic, because it's just diversifying your portfolio. But that's how you invest, is with cash. And that's what margin accounts do. Margin accounts work on cash. They don't work on credit cards.
Okay, yeah.
And that's true around the globe. I mean, I don't think there's anywhere in the world where you go around buying stocks with credit cards. I mean, there might be, but, generally speaking in US, UK, Europe, it's pretty much cash. That's the way it works. So there's some logic in that if you just look at it purely from the why. And actually what that tells you is that they're giving you some validation now that in fact they're almost saying to us, hey, we're actually recognizing this as a form of an investment, and because it's an investment, therefore you need to use your money to make investments like any other investment you might make. So that might be a positive thing if you look at it that way.
Yeah, I think long term that is, and that does add to the validity of it if it's being considered at the same level as, you're right, as a stock, since you can't buy that with your credit card. So that makes sense to me too.
And I suppose that kind of takes us to an interesting related topic about the validity of Bitcoin as whether it's a currency or not, which came up in the Senate this week, didn't it, in the U.S.?
Yes, in fact, they did. Yesterday, the U.S. SEC and CFTC met in a crypto meeting, and it did go well overall because the markets rose and reacted after that. So they were the day before below 6,000 and then rose to above 7,600, and I think got as high as above 8,000 yesterday after this meeting. So which means that's quite well. So basically some key takeaways. It's a small office, and the U.S. has decided not to create a separate department just for cryptocurrency regulation and enforcement. The team they have in place is made up of economists and technologists who are researching crypto, and they've already made some progress in preventing ICO scams, which is what a big thing they're focused on, is they don't want to mess up the market. They don't want to put giant regulations on it, but they do want to keep tabs of ICOs and ICO scams. They do believe that Bitcoin should be considered a commodity and not a security. So there are going to be things that change with that. Potentially, so last night I was also at a Bitcoin cryptocurrency meetup at MIT, and the researchers involved there also mentioned this, and they believe that it's either going to come at the end of 2018, sometimes maybe 2019, where there could be some regulations on the ICO tokens themselves being considered a commodity, which will change a lot of things. But they did not make the actual meeting yesterday did not make any indications of that. They do believe that putting that blockchain and Bitcoin and cryptocurrencies are in fact linked, and that a lot of great things have come about because of Bitcoin. So they don't want strict regulations because that could stop the progress already. They have found that cryptocurrencies could be a utility on a larger scale, not just used for trading, so they're excited about that. And still, the market is very small and needs time to develop, so they are going to just play it by ear and then regulate as things are necessary. So what are your thoughts on tokens as a commodity and whether or not they should be treated as such?
Well, I mean, I've always kind of had an interesting perspective, which is, maybe I stand alone a bit on this, but I always kind of felt like if you're issuing tokens and they're tradable, they're kind of like securities already. And interestingly, instead of giving out dividends, people give out airdrops, which is kind of like giving out a dividend to anybody, not just I said shareholders, not coin holders, but not even coin holders, but any holders of, let's say, Ethereum might be entitled to getting an airdrop of a coin. And, those things I'm certain would not comply with the SEC or the FCA in the UK or any of the other regulators across Europe and Asia generally, because the rules that they've built around trading and defining the rules around what trading looks like and how to measure the stocks against those companies and having a prospectus for those companies and having full disclosure about who the officers are and what the project is and the revenues and all the financials being disclosed. I mean, all that stuff kind of is needed if you really want to have a more transparent environment, which would actually stop a lot of the ICOs as well. But at the same time, we do need some freedom to innovate and create something new. We need an environment in which we can do fundraising. I mean, no one ever complained about Kickstarter or Indiegogo, and the only reason they didn't was simply because you were raising money but not being given a token. But you were given an item if you were lucky enough that the company succeeded. But I don't know about you, Yuri, but I've put my money into a lot of Kickstarter projects and seen nothing come of them, watched my money go down the tubes. And just because they didn't issue a token, nobody bothers to question what they've done. And it could have been scams just as much as anything else. I mean, I'm not sure that there's more or less of a way to differentiate other than the token itself.
Yeah, you're right. Because I have been part of a company that was on Indiegogo, and they still haven't released their products. So yeah, I mean, it's the same kind of thing where a lot of people are now issuing these tokens so they can do further development. So oftentimes you're getting involved in these ICOs for companies who have a lot of ideas but don't actually have a physical product. So it it makes perfect sense your comparison.
Yeah, I mean, the token is a utility. Even some projects don't even use the token as a utility in the platform. I've seen examples of here's a really silly example, but you want to borrow some cash. Let's say you need $10,000. So you say, well, okay, so I will lend you $10,000, but you have to give me 1 Bitcoin as collateral. Now, where's the token in that? Because it's a simple swap of Bitcoin to dollar. You don't really need anything else in the middle. And yet, there have been ICOs trying to launch around that particular concept. And then when you question them, and I've actually spoken to one, I've seen several trying this, and I said, how are you using a token? Well, we're not. We're just putting it on the exchange. And then my response is, well, then you're not tokenizing the platform. So then it's the security. Then you're just launching a token into the market that's just being used as a tradable token or security or share to value the company. But there's no particular reason why you need to be an ICO if you're just a loans originator providing cash for coin. I just don't, and there's lots of examples of projects out there like that who just haven't quite figured out that they need to actually tokenize the platform or have a really meaningful way to use the token.
So that brings me to my next topic, and that is Puerto Rico. So a bunch of cryptocurrency bros led by Brock Pierce have now descended on the island of Puerto Rico because of tax reasons. So what have you read about this? What are your thoughts
it's a stateless state, right? So Puerto Rico is like Guam. It's a territory. And because Puerto Rico has been devastated by the hurricane, they're trying to encourage lots of investment. And they're offering, like any state could do, or region, they're offering various sort of tax incentives and tax breaks to be there. And that's fine in part, but need I remind all of them that they are still under federal law from the U.S., which means they are not escaping the law of the SEC or the IRS for tax evasion. So if those two governing bodies determine that what people are doing in Puerto Rico is leading to some form of tax evasion, or frankly is doing things that aren't quite in compliance with the way that tokens and projects should run, then naturally, of course, it's going to lead to problems. You still can't escape paying federal tax in the U.S. regardless of where you live. But the local tax is great. If they've got some sort of a tax break, fantastic. But I don't think we should be. I don't think we should think this is like the Cryptopia of where to go.
Oh, right. And unfortunately, I think that's the actual name they're trying to call it, or something bro-ish like that. Why? So with as much, you'd say, creativity maybe, or money that they have, you think they come up with better names for things?
I'd rather see that cryptocurrency projects, coin companies, try to be as legitimate as they can be. I mean, if you need to be regulated, we've seen examples in Singapore of projects that have gone down that path. And I think it's fantastic that they've gone and they've worked with local regulators. They've built and forged relationships. And, here you get a country like India that just goes, we don't like cryptocurrency. We're going to ban it. And it's all against the law. And they don't even bother to listen or get involved. And frankly, it may be a big country of 1 billion people, but cryptocurrency is so small there. I found it quite amusing. But, I'm going off piste a little bit. But I mean, the point here is that, a little bit of regulation is not a bad thing. We definitely need a little bit because, it's getting a little out of control with all the scams. And unless you go back and listen to one of our previous episodes around, identifying scams, maybe we need to do a refresh on even more things to look for in the scam world and to make sure you're not getting yourself invested into something that could get yourself into trouble. I mean, I don't know that that's the case yet, but you never know. It might be worth just us investigating further along the way to make sure that we keep our listeners in the clear by making sure that what they invest in is smart investments.
Mm-hmm. Yeah, I think that's a great idea. And especially as the SEC starts looking more into what's happening in the cryptocurrency space, better protecting yourself and watching what's happening with the law is a good idea. So we'll do some more investigating on that, and we'll do another episode.
And one thing to mention, of course, is that what many people don't realize is that the stock market's foundations really started in the U.S., 80 plus years ago. And a lot of the rules and the laws that came out that have formed the foundations and the basis for a lot of the things that other countries have adopted happened because of things like the Great Depression and a lot of the rules around how to regulate and govern how companies operate and run. And that's why countries like some of the Caribbean countries are very closely aligned to the SEC. You find that the UK and the FCA have some very similar rules. Singapore is very closely aligned. Switzerland and their regulatory body are quite strict. So it's not even a discussion about, the Securities and Exchange Commission in the U.S. This is really about understanding the boundaries around what's really going on and just making sure we're smart about it as projects that start up, to make sure that you're doing your KYC properly, that you're doing your AML properly, that you're trying to comply as much as you can with, issuing and sharing as much as information as you can about the project, about the team, about the people. Authenticity, legitimacy are so critical to all of this, because the more that you can share, create a prospectus. I mean, a white paper is a good start. Create more, share more information. Don't make it just a technical white paper, but share more, share your financials. I always say have a minimum viable product or a prototype out first. Don't go and raise money and then say, now we're going to go build an MVP. I mean, what were you guys spending all those months doing, sitting around there just trying to get, spending all your money to do an ICO? I mean, why not build something first so you've got something to show people, so people have legitimacy from you? They know that you're authentic and real. So and all those things make such a difference, because it just shows the governments as well that you're actually serious and legitimate as well. And it's a really weird kind of world we're living in now, but regulation is going to keep coming. So it's going to weed out the good from the bad. That's for sure. And that'll be a good thing in some ways. And, Goldman Sachs even had an article out today talking about the fact that, don't be surprised that a lot of cryptocurrencies go to zero. Well, to be quite honest, that's not surprising, right? Because, when you have 10 startups, 1 succeeds, 9 fails. That's statistical. That's normal that happens.
Right.
So don't be surprised if cryptocurrency projects go, well, we've run out of money. We didn't succeed. We didn't generate revenue. We couldn't get the project off the ground. I mean, some of that might be dodgy, and could they really spend $30 million in a year? I mean, God knows. Who knows what they've done? Maybe the team breaks up and they can't operate together anymore, and you don't know what their shareholder agreements were, or even if they had one. So, there's a lot of other factors that will play out in all this, but that's why it's really important to target and look for good, solid companies that have working products, maybe established companies that are already launching into crypto, or projects that are building light prototypes, because all of that just gives more legitimacy to what people are doing.
So something interesting you brought up a little bit ago, and that's the connection between what's happening. Actually, your comparison to how the stock market was then created and regulated. So, is there something you're noticing between the Bitcoin charts and what was happening with the stock market in the .com bubble?
Oh yeah, there was a really interesting chart that was flying around. I'll repost it on our Telegram channel as well, so that people can try to go and find it there. In fact, maybe I'll pin it to the top so people can find it. So just before I mention what the chart says, the channel is t.me/coinvestors, which is on Telegram. So Telegram, the app, download the app and just go to t.me/coinvestors. And what was really interesting was that somebody had done a side-by-side comparison of the .com bubble and the initial rise of the whole kind of money flowing in and everything just running its way up really fast. And then it came down. And then it went through a quiet period, and then it did a massive run up again. This was like the second run, and this one was like, twice as high as the first one. And then that just came crashing down, and that was where the crash really occurred. Now, what's interesting was that the chart that they showed was Bitcoin, and Bitcoin had just done the first run up and come down. Now, it's not to say that it's going to do a massive run up again, but fascinatingly, there was an article out today which said that analysts are anticipating that Bitcoin could rise to 50,000 in 2018. Now, I'm not tying that chart together with this particular analyst because there are tons of pros and tons of cons of people out there that are in camps. You know, you've got Carl Icahn and you've got Warren Buffett saying, no, this is all a big fraud. And you've got tons and tons of other analysts out there saying this is all valid and it's all, part of a new ecosystem and it's going to go up. But this chart was really interesting just to see that the first phase of Bitcoin had done, pretty much identical to what the NASDAQ bubble, .com bubble did. And it would be really fascinating to see whether or not we now get a next bump up over the course of this year. And mind you, of course, it's going to be much more accelerated than what we saw in NASDAQ because that was over years rather than over weeks because crypto moves a lot faster and does run 24/7 rather than 8 hours a day. So one day is like 3 days in crypto. It's a really interesting chart. And, like all charts, you have to take these things a little bit with a grain of salt. But it was really interesting that someone actually managed to kind of peg them side by side. And I was like, wow, that's really interesting. Something to take note of and to just be wary of, because if it's going to do a massive run up again, then it's going to come back down even harder the next time before we see that stabilization and that real kind of, adoption that occurs after that second kind of bubble. But let's see. I mean, that's, I'd like to hope that we have a more steady state from this point forwards, but, we all know what we've been seeing in crypto. It's been up and down like a yo-yo. Kind of suspect we won't see the level of stability we want simply because the general population is not in it, and it's very easy if you're a whale to manipulate the price movement of coins much more radically than we would like, because they can go in and start buying like crazy and drive the price up. And it's not even necessarily a pump and dump. I mean, we've seen Bitcoin move, violently, and it's been partially tied to the futures markets from CME. So we don't know for fact that that's what happened, but we saw tons of volume occurring around on the exact same date that the futures were expiring. So correlation is not causation, but it's certainly a good indicator that there are people out there that have big money that can manipulate until such time that there's enough generally volume and money in there that would stabilize things. And that is unfortunate, but it is what it is right now. And I think there's more believers in the future technology and the changes it can bring and the great value it brings to our world and society, which is why people are jumping in on this, as well as, of course, for some people, it's naturally the opportunity for some faster gains than you'd make in other market conditions. But of course, it comes with much bigger risks and much bigger volatility up and down.
Mm-hmm. Thank you so much, Steve, for chatting with me a little bit about what the fork is going on in 2018. This is awesome, and that definitely gives us an example of just, again, what's happening right now.
Yeah, so I would say this, what the fork is happening in 2018 has got to be an ongoing theme now for this year. And I think to follow that up, next week on the Coin Chat, let's talk about some of the big companies who have been announcing various activities and projects in the world of crypto, whether that be Kodak, Telegram, or Singapore Airlines, and there's been numerous others. So I think that will be a great kind of segue to this, to talk about some of the bigger players that are jumping in, which again lends itself to some of that credibility and legitimacy that we are looking for around, where things are going. Yuri, thank you. This has been a really enjoyable, entertaining, and somewhat emotional chat, because this week was so volatile and so crazy. Until next time, to the moon, and have a great week.